All right. So welcome everyone. Welcome to our Birdview's weekly workshop. My name is Misha Tampak and I will be your host for today's session. Our workshop takes place every Tuesday at 1 p.m. Eastern Standard Time or 10 a.m. Pacific Standard, where we cover a different topic each week. You can register for our weekly workshops and other events through our website under the Events tab or use the URL displayed on the link above. We post our list of all of our topics in advance, so you have the option to sign up for multiple sessions at once. I do encourage you to join as many sessions as possible, whether it is as a refresher or to learn tips and tricks on how to make the most of Birdview for your project management needs. With each session, we start with a demo on the topic that we are covering and then allocate the last 10 minutes to go over any questions you may have. So please feel free to send in your questions in the Q&A chat box. For those of you who are new to the series of workshops, we are covering our new and enhanced business intelligence reports. And today we will be reviewing the project risk assessment report. So the agenda for today is we're going to go over the risk assessment report. We'll take a look at the purpose of the report, the types of risk or trouble indicators that Birdview uses to indicate any variances, and then identify risks at portfolio and projects level. And then finally, we'll cover the questions, any questions that you may have. And then lastly, the details of our upcoming webinars and workshops. So the very first thing is, what is the purpose of the risk assessment report that we are about to discuss? So the purpose of this risk assessment report was to examine the deviation in budgeted labor costs, expenses, revenue, profits, to enable the project managers to proactively identify and quantify potential risks. So it detects the variations early on so that the PMs can investigate the root causes. And the report also quantifies the impact on the project finances. So the report that we're about to demo facilitates informed decision-making, transparent communication, and development of any strategic risk management plans. Ultimately, this risk assessment report empowers the project managers and executives to navigate uncertainties for successful completion of the projects. So you may ask, what are some of the risk indicators that Birdview uses to identify and highlight on project and portfolio level? So there are a few ones. So the very first one is the end state. So obviously, if your project is going over, is past due, it's going to highlight as action required. The system also analyzes actual versus estimated hours, the actual costs versus budgeted costs. So at the project level, it's going to be estimate to completion if it's greater or if it's less than or greater than the budget. And at activity level, estimate at completion labor and compare it to the budget. So at a very high level, we analyze the budget variance, which is actual cost, if it's greater or less than the budget or the target. We look at the revenue variance, if our actual revenue is greater or less than the target revenue. So if, let's say, the actual revenue is less than the target revenue, it's going to indicate as a risk. And then profit variance, if the expected profit is less than the target profit, the system will recognize that variance as well. All right, so let's get started. So I'm going to pull up my risk assessment report here. Again, to access this report, you must have access to Business Intelligence module, which comes in all of the Birdview Enterprise accounts, as well as some of the team accounts, provided that you have purchased the module. So you can click on Business Intelligence, and in the drop-down menu, you'll have a bunch of reports that we have updated. And then we're going to look at the risk management report and then risk assessment. So here, as you can see, there are two tabs. One says portfolio risk assessment, and the other one says project risk assessment. So the very first one we're going to look at is a portfolio risk assessment report. So here, as you can see, you can filter the data by portfolio spaces, which is not applicable in the situation right now. You can also filter by project or project status. So because there is no filter applied to it right now, you can see all of the projects under all of the portfolios that we have in the system, right? But let's say if I wanted to pick a very specific portfolio. So I can simply click on the down arrow and pick conferences because that's the one I'm using for the workshop. So as you can see, the moment I selected the portfolio, only the projects that are nested under the conferences portfolio is reviewed. So here at a very high level, you can see the details of estimated hours, budget versus actual cost, the target revenue, estimated completion billable, and so on. And then at the bottom here, where it says project trouble indicators explanation, you will see what's of the formula we are using here. So as an example, here it says actual versus estimated hours. 3,000 hours are actual, estimated are 4,800, so we are all good, right? This is why nothing in here is highlighted. But if we scroll to the right here and look at the profit variance, you will notice that it is highlighted in red. Why? Because it's actually required. Why it's saying that? It's because the target profit that we have identified as our target stated as $22,000 versus what our actual profit is going to be, $9,200. So this gives you a variance of $13,000, and the system recognizes that, hey, your expected profit is going to be $13,000 less than what you have targeted. Please take a look at the project details. Maybe there are some costs that you want to manage. So that's what this report shows. And you can also see the formula or like the type of indicator at the bottom below here. It says 9,200 is less than the 2,200, and our profit variance is, well, in this case, it should be less than 13,000 is less than 0. Hence, it shows that you have something to investigate. So ideally, when it comes to revenue variance, profit variance, and budget variance, in an ideal state, we want it to be 0. However, reality always deviates from what we expect, the ideal situation. So there could be some variances. And this is why if the budget variance is higher than 0, we are in good standing. If the budget variance is less than 0, that means an action is required on the actual side of things. The risk indicators are shown below. So the index and the legend here is here. So you've got at-risk items are highlighted in yellow versus action required is highlighted in red. So you can see that here. At-risk is going to be pretty much shown at the project level because the metrics are different for at-risk versus the action required here. All right, so let's go to project assessment. So project assessment here, again, you have a lot of filtering opportunities. You can filter it by project, portfolio, owner. You can select the type of activities that you want. Again, once you have selected the project. So you may ask where this information is coming from. So kind of, speaking from previous sessions, all of this budget information, whether it's at activity level or project level, is coming from the financial data. So what we're going to do is we're going to compare some of this information so you have a visibility, like visual, on how to tie the information in. So here, as an example, you can see the project risk assessment report really breaks down the information for your project on an activity by activity basis, right? So let's take a look at the activity risk indicator first. So here you can say you have a total of 21 activities. On-track activities are 21 as well, which is great. If there are any activities that are closed, overdue activities, in this case, it says 6 activities are overdue. And then there are one activity that is going to be overdue in 1 day. in 3 days. One activity is going to be overdue in 3 days. So that's why it kind of highlights. So you can take a look. And if I click on it, you can see the information. But let's go ahead. End date, we've got 6 activities. Estimated hours are 10, and budgeted is 19. So let's go down here to the activity details section. Here you can see, let's take an example of defined audience target. You can see that estimated hours were 54, but actual hours were 104 that was logged against this activity. So right off the bat, the system says, hey, watch out, you have overutilized you have overspent your hours on this specific activity. And it's indicated in red here. If you look at defined event concept, you can see that this is highlighted in red, which means action required. And the reason being, this activity is overdue by 2 days already. So as a project manager, you want to make sure that this activity or this task has been tackled with ASAP. And it also gives you a list of assignees who are working on this particular activity. You can see the start and end date. So here as an example, the end date is the November the 17th, which is, 2 days overdue now. So the system, again, is taking the metrics from what we had discussed earlier. So end date is way past, as well as the days left is -2. If you look at, let's say, select venue, here you can see that you have a budget of 340 left, right? Which means that you have not, your budget is quite low, whereas what you've utilized is $19,000. Sorry, $1,900. Oh, geez, $1,900, as well as your days left. The activity has been overdue for 25 days now. So this is how, as a project manager, you can really drill down into the risks of each and every activity, whether it is estimated hours, whether it's the end date, the budget, and so on. And then as you can see here, develop marketing plan is highlighted as yellow, which indicates that, this is potentially at risk right now. One of the key things that you can see here, your estimated hours are definitely way less than the actual hours, and then you have 0 budget left, and so on. So I'm going to quickly revert back to our portfolio risk assessment, because that is at a very high level that we are seeing the information. So this is where as I mentioned earlier, we can compare this data to our financial module of the specific project and see where this information is coming from. So let's say, as an example here, we've got estimated hours of 4,801 hours. If we go back to our activity, here in project details, you can see our estimated hours are 4,801. Then your actual hours are being tracked based on who all are logging hours. And here in the actual hours section, we can see that 3,000, which is a cumulative of all the activities, is 3,000. So that's where you're getting your estimate versus actual. Your budget and actual information is coming from your financial module. So let's go back. So let's see budget is $239,000. And if we go back, go into project details and our financial module, you can see our total budget is $239,443, right? And this total budget is coming from your targets. So this is breaking down the details of your $239,000 project budget, which is cumulative of your labor budget, any planned expenses at the project level or activity level budgets to give you that $239K. So let's go back to overview. So this is your total budget. And then let's see, we have actual cost of $140,000, which is estimate at completion cost $140,000, right? Which is coming from right here. Then we have the total target revenue of 143,000 and EAC billable at 149. So if we go back, our total target revenue is $143,000. And after all our billable expenses and billable labor that we have identified, our estimate at completion billable, which is going to be to the client, is going to be 149,000, which is already higher than the target revenue. So we can see the variance is a positive $5,000, which is what you can see right there, revenue variance. So total, EAC billable of 149,000 less total target revenue 143 gives you 5,400. Now let's take a look at the budget variance, which is here, as it indicates, is $99,000. So we go back and here, so we've got $239,000 total budget, and we saw that in the targets. Our EAC cost is $140,000, which is right here, to give you a variance of 99. So our estimate at completion, which means by the time our project is completed, our total cost will be 140, whereas we had budgeted of 239. So that gives you a variance of $99,000, which is again positive because we're spending less than what we had anticipated. So that tells you that your overall project is not going to be at risk when it comes to your costs. And then we have reviewed our variance and then profit variance as well. Target profit was $22,000, which was set right here. So under in the financial module, under targets section, you can see this little toggle that says profit. You can set a target profit as a percentage or amount. In this case, we have used the amount and we have said we want $22,395.56. Obviously, it's coming from a percentage. That's the target profit. And then when we take our expected profit, which is right here. So $149,000 less $140,000 EAC to give you $9,200, which is less than what we had expected, that we had set as a target, right? So this is an indicator that we might want to manage some of the costs and some of the budget there. Let's go back here. So that is our risk assessment report at a very high level. And again, all of these reports are will be out of the box, and then provided that you consult with your customer success if this report is something that you want access to. And then anytime, let's say you have additional components, like customized components to track and assess at the risk level, then you can definitely add those to the report as well. Again, for that, you would have to be on a private cloud to make any modifications. And then once you're there, you can add some custom fields in the report as well to make it more targeted and specific to your project and business needs. So that wraps up our risk assessment reports. Are there any questions? Okay, I'm just going to give it another minute. I know that's a lot of information there. All right. Okay, so since there are no questions, what I'm going to do is I'm going to quickly review some of the high-level questions that I've created for your purposes and for anybody who is new here. So just kind of reiterate, when are these reports are going to be live and available to the clients. So these reports are pretty much live, but again, we are slowly rolling these out to our clients. And then some of the reports, some of the accounts are identified the customers by customer success to roll out. Otherwise, if you want to access some of these reports, you can send in a request to your customer success manager. So I'm just going to quickly move that down. And then who are these reports accessible to or available to? So as I mentioned before, all of the business intelligence reports are available to Birdview enterprise accounts only. And then these reports are going to be available based on requests, or if customer success manager has identified clients who are in urgent need of these reports. The reports are also available for Teams accounts, provided that they have access to business intelligence and the financial module, right? Because most of our Teams accounts don't have financial modules. So if they don't have it, this risk assessment report will not be feasible because you don't have you're not tracking any financial data. So at that point, a project report will be more applicable. So again, all of these reports will be available to all the clients, provided that they meet the criteria. And then the process of deployment is going to be by request only. Some of the things that are considered are the variable data points and customization that could alter the timeline of deploying the Power BI report here. So how we give access to these reports, the very first thing, the administrators will have access to the reports first so that they can validate the data that's translated into these new reports to make sure they are accurate before we publish it to the wider user group, the audience, just to make sure everything is running smoothly and all the data points have been mapped out correctly as well. Who can access to the Power BI report? Anyone who has access to the BI module in the global permission level, which is going to be in company settings under access level, they can access these reports. Now, you may ask that some of these reports are not appropriate for certain user groups. So what we can do is we can further limit who can see what type of report, not the tabs within the report, but the full report in itself. So that way you can customize which user groups can see what types of reports. And to what extent can these reports be customized? So I would say for any additional slicers, which are also filters, there won't be any additional cost. However, the report will be in a separate group of reports. So you won't see it under the BI group suite of reports. It will be separate because there will be some additional customization that deviates from the original version of the report itself. The logic of the report can be changed. So if the logic of the report is changed or significant customization is required for these reports to meet your business need, there will be additional costs associated with it, and that can be determined on a case-by-case basis. And one of the important things is how frequently is the data updated. So in these Birdview, these new reports, the data is, or at least for some group of reports, the data is updated a couple times a day. The reason that some of these reports are not live is because, there could be a certain level of complexity, the amount of data the system has to go through, the technical restrictions, and some best practices we need to consider when identifying the data refresh rate. But then again, if you do need a frequent refresh rate, we do recommend to switch from a multi-tenanted to like a private cloud, especially if the reports are complex. So just a couple of items that I thought might be helpful to you as a user. So again, I just want to say thank you everyone for joining our session today. I hope you did find this risk assessment report helpful. Our upcoming webinars, or in this case, workshops, will be on the 28th, where we will review the last couple of reports, which is time logs and resources. And then on December 5th, we are going to do a quick refresher on resource planning, just to make sure that we set you up for success. Any new changes or enhancement has been made to the module are also reviewed, so you understand and fully understand how to make the best out of resource planning module there for your project management needs. And then lastly, on December 6th, which is our very last webinar of the year, we are going to go over our multiple spaces, which is our newest enhancement to the product. This is going to be upcoming in the next couple of months. And then, so it is called Efficiency in Focus and how tailored spaces for your project successes. So what it will do, it will be, it will just indicate how multiple spaces can cater to your organization structure and enhance your project management experience. So please feel free to go ahead and register for that, because I think it's going to be one exciting product enhancement that we have done this in the last couple of months. So yeah, so thank you again. Thank you for joining our session today. We do welcome all of your suggestions and recommendations for future topics. If you want us to go over anything in the past that we have covered, feel free to let us know, and I'll be happy to do a refresher topic here. You can send your requests to success email, which is displayed on the screen. That is success@birdviewpsa.com. Thank you again, everyone, and I hope you all have a great day, great weekend. For some of you who are in the US, hope you have a great Thanksgiving, and I will see you next Tuesday. Thank you.